Hi, welcome to this video day, which is on the 30th of April. It's Tuesday afternoon, 3:30 p.m. GMT. I'm just going to look at trade setup day, which is going to be USD JPY. Now we'll go and take a look at the chart in just a moment, but we really like the look of this trade setup because the USD has tried to push through a key level of resistance. That level is held, and now we're coming down to a key level of support. If that breaks, we expect a big move down in USD JPY. And this pair has been trading with relatively low volatility recently, but that could all be about to end. Now, what we will do is we'll go and take a look at the chart, but please keep in mind, when I do my analysis of the chart, it's my view at this moment in time. It can change, obviously, in line with the market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 major Forex pairs, including, of course, USD JPY, you can click on the link beneath this video and you can get live access to our member center. Right, let's go and take a look at the chart setup. Right, we're on the USD JPY daily chart. I'm just going to draw my levels in a moment. But first of all, before I draw my levels, just want to look at the sentiment behind the chart, because that's really influencing the way we see the technical picture. Now, just very quickly, I'm going to go through the notes I put on the left. I'm going to start first of all with the CFD Net Traders positions. If you're unfamiliar with this tool, it's fantastic. It's free. It comes from CFTC, and it will tell you where big money is positioned in the markets. If you want to know more about it, you can just click, search our video COT Net Traders indicator. Okay, but in brief here, what we like to do is compare what two groups are doing: speculators and commercials. Commercials are the smart money. Okay, when they diverge away from speculators to a significant degree, you're normally going to get a break in favor of the commercials. Now, we look at the positions. Speculators 4.4 to 1 in terms of longs over shorts. They're very bullish of the USD. Commercials aren't, though. They're 3.3 to 1 in terms of shorts over longs, so they're bearish. Divergence between the groups 7.7, which basically is a good divergence in this pair, as regular viewers will know. It points to the dollar going down. Now, in terms of why are speculators so bullish and why is the smart money selling? If we take these notes down here, the trade-weighted yen, that's the yen just basically measured against other major currencies, it's decreased by around 5% from the highs in January. So it's oversold, and it's the cheapest G7 currency. Okay, so it's already oversold, and the bearish fundamentals for the yen have peaked. We've got risk on, but the yen's not falling. You can see it here. The USD can't take out the 112 level decisively despite risk on. That should hurt the yen because it's a safe haven. Dollar is going down, so we take that as bullish for the yen, bearish for the dollar. If we get risk off, a high possibility of it, the yen is going to soar on every major currencies. It's number one safe haven. Now, in terms of why speculators are so short or bearish of the yen, it's to do with stimulus. They say, well, Japan has got negative rates, it's printing money, so that should keep the yen under pressure. However, this bearish fundamental has peaked. A stimulus will get smaller. They've already made a small tweak to their stimulus program in Japan, and it will get smaller, and then the next move in rates will be up. So this bearish fundamental now is priced in our view. Also, the Japanese are the world's biggest savers, 500 trillion US dollars overseas, and a lot of that money now is flowing back to Japan. That's in risk on. It's going to continue to flow back to Japan. Risk off comes, then it'll really accelerate, and foreign money will go into the yen because it's a big safe haven, right? So that's the backdrop. Now, in terms of really key big levels, it's this level here in dollar yen. If I can get my line straight. Sorry, my mouse won't work. There, 112. Now, in terms of this level, the commercials have basically defended the level on the chart here. They've sold aggressively. They're selling aggressively here. when we came down through the level there, they were very short, okay? So that is the level the smart money, the commercial hedgers are basically selling into. The speculators are trying to push through the level, and so far they're failing to take it out decisively. Now, if you look at this last move up here, two nice big blues, yeah? Hit a brick wall at the 112 level. You get 7 tiny candles where the speculators cannot push through the level. Then finally they do on this blue, but it's only up to 112.45, I think. We come back to the level, then we fall, try and get through it again, fall, try to get up to the level, can't, and now we're falling today. So it could mean that the commercials are winning the battle, so to speak. And in terms of this trade, we're already in it, but there's a good entry level for fresh positions, which I'll come to in a moment. Just draw a trajectory in there, which is across that body, tail, tail, body. Okay. Now we're in at 111.80. It's only 111.25, so it hasn't moved much. Small position, but we want to add, and where we want to add is here. That level there. It's another round number, so you always get a lot of order flow around round numbers. And just want this level cleared. 110.80 will do it, and then what will happen is the speculators will get taken out on stop. There's too many of them long. Now, is this level here support? You could see it that way technically. I personally don't see it that way. Looking at the COT net traders positions, because we've had low volatility here when we came up to test. You can see it, how tight the Bollinger Bands are. If we get through this level, the speculative stops will get run, and we'll probably take out this 110 level, okay? First target for us on the downside is here. Okay, so 107.80. So if you came in through here, you could have your stop back behind 112, and you get about 3 to 1 in terms of risk to reward. Now, that's only our first target. Our second target is 104.50. We think the yen is on the verge of a big move. Obviously, we've got to manage this trade as it goes. So yes, at the minute we're in at 111.80. Our stop is actually 112.80, well clear of that tail. But breakout will see us add, and then we'll be at 112.30 probably in terms of our stop, just back clear from the big round number, the big hedging level. I wouldn't rule out one more pop up in the dollar, but I think the dollar rally is on borrowed time. I think it's going to be hard to take out the 112 level decisively. This level gives way down to here, and I haven't taken the chart for far enough left, but 104.50 is the next level down, and also it's a weekly support level as well. So yeah, for us, looks a good risk to reward trade setup. Yeah, I think we're just about to confirm a big move down. Right, let's now go and look at CAD JPY.